Welcome back, everybody. In this video, I'm going to show you the simplest swing trading strategy for consistent profit. The first thing we're going to do is add a few studies to our chart. So we're going to come up to the Edit Studies tab, type in Simple, double-click Simple Moving Average twice. The first one, we're not going to do anything. Second one, double click it, change the length to 200 and change the color to red. Then come back up here, type in RSI. Double click RSI and we're going to do nothing to it. Click apply and OK. Now you should have an RSI indicator up on your chart as well as two simple moving averages. Now we're going to set up a couple different time frames. So come up to the time frame tab. Go to time frame, have 180 days set, and then for aggregation period, set it to 2 hours. Then click the little star icon on the bottom left to save it. Click OK, then come back to the time frame tab, go back to time frame, and then set this to 3 hours, and then click the little star icon. Now onto the RSI indicator. This indicator will now basically tell you if a stock is undervalued or if it's overvalued. When price action gets under this 30 area on the RSI, it will turn blue, and that determines that it's now undervalued, also known as it can be considered a good buy. When price gets above the 70 area on the RSI, it turns red, and this now tells us that price is overvalued. And this should be an area where we should consider selling. Now, when it comes to this swing trading strategy, there are certain stocks that tend to respect the RSI on the time frames that we set up. So if we're looking at AMD and we go to our 180-day 3-hour time frame, you'll see that if we purchased AMD whenever it was oversold on the RSI and then just waited till the RSI said it was overbought, we would have turned a profit. And in this one, this would have been a 10-day swing trade and it had 14.5% upside. Then once we sold it, we could have just waited until the RSI said it was oversold again, bought in, waited till it said it was overbought, and then this would have been a 13-day swing trade with a 15.5% upside. As far as the simple moving averages go that we made, we basically just use that as a guideline to determine if the stock is uptrending or downtrending. Now, if price action is below the red 200 SMA, this would mean that it's in a downtrend. If it's above it, then it means that it's in an uptrend. Now, this doesn't mean that you can't turn a profit if the stock is below it and in a downtrend, but it is just something to consider when taking a position. Now I'm going to show you how to actually find these stocks to swing trade. So we're going to go to this scan section and we're going to go to add filter. Click study. Go to Popular Studies, RSI Scan. Set this to less than, and set this to 45. Then come over here and set this to 4 hours, and make sure EXT is checked. Then go back to Add Filter, go to Stock, scroll down to Last, and then I'm going to set this to 12. You can set this to a different number, but this is just telling us that we're only going to scan for stocks that are at least $12 or more. Click Scan. And now we have an entire list of stocks we can go through. So if you see something that interests you, I'm just going to go to Boeing, BA. We're going to go back to the charts, type in BA. And now we're going to see if it fits our swing trading strategy. So right now I'm on our 180-day 2-hour time frame that we set up. And if we're looking at it, if we go to the RSI, if we were to buy in when it was oversold and then just sell out when it said it was overbought, we would have made a profit. Now, the key to this strategy is to make sure that the stocks that we pick have a consistent pattern of constantly being oversold and overbought. But the key is to make sure that every time we buy it when it was oversold is that we can sell it for a profit when it then becomes overbought. So with the other time frames that we set up, like the 2-hour and the 3-hour, you can just cycle between them and see which time frame the stock tends to respect the RSI the most. So to put everything into a summary, first thing you want to do is find stocks that follow this RSI pattern. The second thing is you're going to cycle between the time frames we set up to determine which one follows the pattern the best. Number 3 is, I can't stress this enough, but be patient. And number 4 is buy when the RSI is oversold and sell when the RSI is overbought. Now before I end the video, I will list a few tickers on the screen now that I swing trade using this swing trading strategy. Just know that if you're watching this video in the future, the pattern may not be relevant anymore to these tickers, but if you're watching this video and this video is fairly new, then they should still follow this pattern. Other than that, thank you for watching, and I'll see you in the next one.